Hi, this is Randy Finney with Right Side of the Chart, and this is a pre-market update for Tuesday, September 10th, 2019. I was going to get some screenshot charts out to you like I typically like to do if I get a pre-market update out in the morning. I know it's a little easier for you to look at the charts, but there's a lot in there right now, a lot that I'm seeing, a lot of important levels, potential developments to watch, and I figure it's going to be more efficient to get this out in a video, try to convey my thoughts and show you what I'm watching. So in the overnight session, we had NQ came down and made almost a perfect back test of the breakout, or a back test I should say, of the August trading range. Posted that actually this morning in the trading room. Was up around, well, quite early today, and so about 5 a.m. Well, it happened just before that. I posted this chart here. NQ was back testing that trading range, and so I mentioned going home short last night, the NQs, and I reversed to a long there, and still holding that position now. I'm going to give you my thoughts as to where I think things might go today. So we made a back test. Now what's interesting, again, that was earlier today. Let me go back to the current chart right here. We bounced a little. It's hard to see right here on this 60-minute chart. You zoom in, you can see we bounced off that level right there. There it is. A little bit so far. We probably won't see a lot of volume come into the futures until I can tell you we won't see a lot until the market opens at 9:30. I don't know if there's anything on the economic calendar today that might move the needle at 8:30 a.m. It's about 8:19 right now, so in about another 10 minutes, if there's any economic reports out at 8:30 today, that could give you a little lift in the futures or a little drop. But what I wanted to point out is here's the levels to watch. It's just pretty interesting. The breakout last Thursday. The catalyst for the breakout seemed to be more so this downtrend line off the highs. That was all-time highs just to the left of the chart. Here's the downtrend line. You can see the impulsive buying came in when that downtrend line was taken out, but then we did continue through the key level right here, 77.75 in the futures, NASDAQ 100 futures. That's the top of the August, early September trading range. They were both taken out, but the impulsive buying really started when we popped the downtrend line here. And then we've come in for a full back test on NQ. So I wanted to point that out. Now I'm going to flip over to ES and show you something a little bit different. We had the breakout in ES was the top of the trading range. ES, that comparable number is about 29.44. Again, ES is the S&P 500 E-mini futures. So you can see this is very well defined. It's the top of the August trading range. And that was a catalyst, not the downtrend line off the highs, but the breakout above the the top of the range there. And as you can see, as I just showed you, NQ back tested this morning, earlier today, and ES is still well above the top of the trading range. So there's a couple takeaways from this. Number one, it shows me that just since the breakout, there's been more selling in the market-leading stocks, the FANGs, the tech-heavy Facebook, Amazon, Alphabet, Microsoft. Those stocks have brought the NASDAQ all the way back down to the top of its August trading range, whereas the S&P 500, full of steady Eddie dividend stocks, utilities, other blue chips, that has not. Okay, so that's one thing to note, and maybe a tell of the market. Tech's weakening, software sector took a big hit yesterday. I talked about that. We're going to watch that today. There's a lot of things I'll be watching today, and I'll continue to update, post updates throughout the day. So where we're at, so the levels to watch now. Should the market take another leg down? Should we drop today? Let's just focus on today, and we'll go one day at a time here. Maybe it happens later this week. But as of today, if the market were to drop, it's about, from the lows, I measured it earlier, about 1% or so for a full back test on ES. And again, I'm talking about that 29.44, the top of the trading range there. And in NQ, the NASDAQ 100, from the lows where we're at today, when we tested the top of its trading range, it's a little more, depends on how far and fast if we drop to get there, but it was a little over. I think it was about 1.15 when I measured it out. But I wanted to say that would roughly coincide, a drop here about a little north of 1% in the NASDAQ should coincide with a back test of the top of the trading range in ES. Because remember, we already tested it in the NASDAQ futures, and so if we drop break that level, come in, and where I'm going with this is if that happens, I would put very good odds, well over 50% that on at least on the initial tag. I know I'm still favoring a breakout, a failed breakout, and move back into these ranges, and maybe it does happen. But I would put a little better than 50-50, or no, I would say better than 50%, that if the NASDAQ drops here, NQ, and we backtest that trend line, and at the same time ES is coming in, testing its top of its August trading range there, that we'll have at least a tradable bounce. The buyer should step in and buy the backtest of this trend line because, again, that's where the breakout occurred in NQ, and if that happens, you'll have a backtest on ES. So that would be the a potential trading op there if you want to trade it that way. Now, I'm still slightly leaning towards, but again, my convictions aren't very high for another thrust up here to maybe equal or slightly take out that high, the previous highs, put in a divergent high. You can look at it here. The PPO and the RSI still have plenty of room, and it would look pretty clean. It'd give you that clean separation there and give you a much larger divergent high, setting the stage for a big drop back within and then ultimately down below the trading range. So hard to say right now, really. I think if you went long, if you were in the trading room when I posted the backtest earlier today, or you're long now, you can go long NQ here for with a relatively tight stop. And you might not want to. It's up to you. If you want to allow for a 1+ % downside there for a back test, put your stop somewhat underneath there. That's another option there. But I'm going to keep things tight right here. And if we start running down there for back tests, maybe I'll just step out and see what happens. In other words, this week I think will be pivotal. Excuse me. And if we're going to hit these levels and back test, the market should start moving away from there after, or maybe that was it. Like I said, we've already back tested the breakout in NQ. Maybe that's all the market needs to do and continue higher. So the bulls would love to see that. Bears want to see this. And so I can tell you it's a battleground right here. And again, those are levels to watch. So let me move on. I'll update that throughout the day. But like I said, I'm still very much open to the possibility of that thrust to a marginal new high. But look, it's not going to surprise me if this happens either. My convictions are not very strong in the near term, but I'd say, that's what we're looking at this week. It's going to do, and probably today even, probably one of the two there. Let's look at the metals. I posted an update last night. Again, I usually don't post updates at 5 in the morning in the trading room or late at night, but there were a lot of developments worth noting. So let's start here with I have a gazillion charts going. Let me pull up gold. Let's start with gold. That's the daily chart. Okay, here's the 60-minute chart. So these, I mentioned, earlier today, reversing from short to long when NQs hit that support. And I also mentioned last night, showed you all these risk-off assets fell to the support levels I was watching. So here's gold right around the 1500 level as I'm doing this video, 1499.30. Call it 1500, slight overshoot. All the better, even if you make a slight overshoot. It tends to, suck in a few shorts, get a little potential bear trap. So make it very simple. I have gold falling to support with this bullish falling wedge right here, small wedge. Again, it was all covered in last night's video. On the heels of the breakdown of the larger wedge. So we could continue to fall down through here. These divergences could be burned through, but right now they're intact. So I am favoring a reversal here and a breakout. Now that would normally mesh with the drop in the stock market, and maybe that's what happens today, and that's why I'm leaving my options open. So as of now, believe me, by the time this video is over, I made my positioning. I've been in and out, long and short, both the metals and the QQQ or NQs. Both of them in and out at least 3 or 4 times in the last couple of days here. Long trading these trends. Short, long, short. So I'm long right now the metals. Covered there when we hit those levels. Reversed on the metals, silver, platinum, and gold, as well as Treasury bonds, the other risk-off assets. And I'm leaning towards this scenario. Now it is possible that we break out here. Assuming these bullish wedges break out and we hold this 1500 level, that we rally here and we rally in equities. It's not very likely because there's usually an inverse correlation there, but there have been quite a bit of times, in fact, up until recently, both the precious metals and the stock market were moving up together. So I just want to say that. And by being long today, or at least as of this moment, by being long equities and long this precious metals, it's my hedge in reverse now. Because remember, recently I was short equities and then short the precious metals as a indirect hedge, and now it's working the other way around. So let's say my NQ falls, at least to the point I get stopped out. Well, you should see then the risk-off assets rally, all other things being equal. So again, I call it an indirect hedge because that may not necessarily happen. Sometimes these things trade positively correlated instead of negatively. But again, the setup is there. So to keep it very simple, here's a setup for today. You can one of two objective long entries. One is go long at support on the pullback to support. Remember, there was, like I said, a lot of technical damage on the daily time frames and these bigger wedges recently, so we could very well drop and head down quite a bit more in gold. That is certainly possible. So whatever way you trade it, just don't get married to any one position. And then, so other than taking a long at support at the 1500 area, the next objective long entry would be on a breakout above the bullish falling wedge or the downtrend line. And even if you're only going to pick one of the metals to trade it, best to keep an eye on all of them. Let me find silver. Let me find the right chart. Okay, this is SI. This is the silver futures. And again, I know that some of you guys prefer the ETFs, but you're seeing things that we can't see on the ETFs because they don't trade around the clock. So these, precious metals trading around the world 24/7, and so you're going to see a lot more, pick up a lot more in the technicals. And then again, you can extrapolate this chart over to SLV or whatever you're trading, or if you're using GLD. So here's what we have on silver. We have it like gold. I have it falling to a pretty decent support level. Remember, I had a support zone here, another support just below that, a little bit below. We have a breakout in silver, had a breakout, and we've come in and we're testing that 17,880 support again. So we've had multiple successful defenses so far. We fell to that 17,880 and it's holding. Tap, tap, tap. If we break it, probably, next support's here, and if that goes, then things can get ugly. And if that happens, we're going to burn through the divergences, and then there's more downside. It's not what I'm favoring right now. I'm favoring that this holds, and we at least have a tradable rally up here to that 1838 level, and quite possibly somewhere in this range here. We've let a lot of hot air, especially out of silver. If you look at the daily chart on SLV, a lot of hot air has come out in the last few days, which is good for maybe at least a counter trend rally here, bounce, maybe even more. We'll see what happens. And again, it depends largely on what happens in the stock market. But I just want to mention these wedges are clean and clear. So if we can get gold to break out, that's why silver's not running, by the way. Silver broke out, and no surprise that the breakout's not really taking off. Why? Because silver's only going to go so far without gold. So if gold cooperates, breaks out, then this one should run as well. And lately you get more, not always, but usually most days, more bang for your buck trading silver, meaning it goes up more on a good day if you're long and down more if you're short than gold. Yeah, just real quick, if you like platinum, same thing. You have a downtrend line on platinum, virtual equal lows there with some divergence on the indicators. And then, of course, if that level goes, you have next support down here about 912. But if we break out, probably run up at least to that resistance level right here. We've got a resistance zone right around that level there. And here's Treasury bonds. So I think what's happening right now is these risk-off assets are kind of waiting to take their cue from what the stock market does. So we might not know until probably won't know until after the opening bell today, unless there's any big movement. But there it is. Just like gold, just like silver, just like platinum, we have these pretty well-defined downtrend lines to watch. We have positive divergence right here, bullish divergence, which indicates these things can pop and run. And you can see that would be your first target right there, maybe more. And again, it doesn't take a big move if you're trading CB, Treasury bond futures. Even a single contract, you have a move like that, that's several $1,000s. I'm sure if it can go up to that level there. Let me see what it would be in percentage terms from here. Well, 1%, a little north of that should still be over at least a 3-digit gain. All right, let's wrap it up here, and I'll do an update after the market, sometime after the market opens today with QQQ and SPY, give you those levels. But there's really just not a whole lot to report there on. Oh, you know what? I'm sorry, I wanted to cover this real quick. As far as gold and the precious metals go, my focus has been on the equity markets, and I used to focus a lot more on the euro US dollar, which kind of not doing a lot lately. It's been weak, but there are some potential divergences and things to watch. And so here it is, nothing's changed in the bigger picture for weeks or even months now. We had a bullish falling wedge here, positive divergence. This is jumped out to a weekly chart of euro US dollar. So this is the dollar upside down really, because the euro is the biggest component. So if this rallies, it means the euro is rallying against the dollar's falling, and that would be bullish for gold. So what we have here is in this whole rally, and I've talked about this up until now, the big 2019 rally was 110% a risk off rally in gold. In other words, gold and the US dollar have an inverse correlation normally. When the dollar falls, it takes more dollars to buy an ounce of gold, so therefore the price of gold goes up. And when the dollar is strong, that usually brings gold down because it takes fewer dollars to buy an ounce of gold. However, we saw the dollar rising. Remember, this is upside down, so when this is falling, the dollar has had a tremendous rally, and yet gold has still rallied, which says that rally hasn't been by the aid of a falling dollar, if that makes sense. So what could happen here is if the dollar finally tops and starts another trend down, the euro breaks out, the dollar starts to drop, the euro's rallying, that would be net, quote unquote, net bullish for gold. It doesn't guarantee gold will go up. It just means it will provide a tailwind for gold, and because of the falling dollar. And so I'm watching this chart. You had the bullish falling wedge breakout. We've been back testing for whatever in a day now. These are weekly candles, but the divergence is still in place, and the potential's there. So we zoom down to the daily chart. You can see that same big old divergence building, and really what we need to look at now is the 60-minute chart. And so we had a bullish falling wedge. When I zoom down here, that broke out. Remember, you see this going up, that's the dollar falling. So there's your little small 60-minute bullish falling wedge, confirmed with positive divergence like you like to see. We rallied up here, and we've been knocking on this level here, about 1.10612 in the euro-US dollar pair. So that's resistance. If that gets taken out, here's our next target here, next resistance around just a bunch of ones, we'll call it. And then, of course, if that gets taken out, then the 1.11666 level. And then there's some minor support right there. So let's watch this. This right here is bullish for gold, net bullish. This is net bearish. So again, factor that in with what's going on with the stock market, because that may give us a flight to safety bid or take it away from that. In other words, if stock market rallies, that's really not the best thing for gold. But hey, sometimes they do trade in tandem, so let's just see what happens. All right, let me get this out to you guys, and I will again, once trading starts to normalize today, if I see anything interesting, I'll get it out to you guys. This has been Randy Finney with Right Side of the Chart. Best of luck on your